may this be one of the best moments of your life. You're listening to the Business Mirror podcast for a broader look on business with Senior Editor Dennis Estopase.
Good day, this is Dennis Estopase and welcome to Business Mondays with BM, a segment of the BM Broader Look podcast that focuses on the Philippine stock market. Business Mondays with BM is based on the stock market outlook story written by BusinessMirror reporter VG Kabuwag and comes out every Monday. For the text version online, please go to www.businessmirror.com.ph and search for Stock Market Outlook. For the print edition, please go to the companies section of the Business Mirror newspaper. Let's get on with the story. Last week, share prices plunged as the local market joined the meltdown in other markets overseas. This sent the Philippine Stock Exchange to hit the circuit breaker twice, forcing a 15-minute trading halt. The plunge followed after the World Health Organization declared the coronavirus disease 2019, or COVID-19, a pandemic, and the imposition by the United States of a travel ban on passengers coming from Europe. The benchmark Philippine Stock Exchange Index plunged 976.44 points, or 14%, to close at 5,793.94 points. The Philippine Stock Exchange circuit breaker, triggered when the main index fell 10%, was hit twice during the week, one each on Thursday and Friday. The index nonetheless recovered each time trading was halted. The main index fell in its lowest in 7 years on Thursday when it closed at 5,736.27 points. The circuit breaker was again triggered on Friday as prices dipped below the 5,100 level during intraday trading. Nevertheless, prices rose afterwards, with the Philippine Stock Exchange Index ending on the green for the day. According to Claire Alviar of Philistocks Financials Incorporated, the instruction by Finance Secretary Carlos Dominguez to the Government Service Insurance System and Social Security System to take advantage of the stock's bargain prices lifted investor sentiment, pushing them to pick up more stocks, which was seen in the strong value turnover of 10.71 billion pesos, which was the second highest value turnover for this year. Average daily trading for the week reached 7.57 billion pesos, but foreign investors were net sellers at 3.74 billion pesos. All other sub-indices ended on the red. The biggest loser was the Mining and Oil Index, which plunged 1,553 points to close at 4,727.81 points. The broader All Shares Index shed 545.91 points to close at 3,493.64. The Financials Index declined 180.57 to close at 1,415.66. The Industrial Index dropped 1,042.96 to close at 7,011.11. The Holding Firms Index fell 938.61 to close at 5,673.65. The Property Index lost 699.47 to close at 2,985.40. The Services Index retreated 142.93 to close at 1,187.61. For the week, only 13 shares managed to eke out gains as against 236 losers. 6 shares were unchanged. The top gainers for the week were Philippine Racing Club Incorporated, Emperador Incorporated, Grand Plaza Corporation, First Gen Corporation, Panasonic Manufacturing Philippines Corporation, and Top Frontier Investments Holdings Incorporated. Meanwhile, the top losers for the week were Pacifica Holdings Incorporated, PhilWeb Corporation, Metro Alliance and Equities Corporation A, Vulcan Industrial and Mining Corporation, Euromed Laboratories Philippines Incorporated, and Semirara Mining and Power Corporation. This week, share prices may continue its trade volatility as there is no respite in sight for a solution to the COVID-19 pandemic. According to Luis Limlingan, Managing Director of Regina Capital and Development Corporation, the market will still trade in a volatile pattern this week, given that investors are taking in the developments of the virus on a day-to-day basis. Volume of trade is expected to fall further as Metro Manila is already placed on community quarantine. Many work on government offices were suspended while some in the private sector will implement a work-from-home policy. According to Limlingan, we think that Friday's rebound is not yet a sign a full recovery of the Philippine Stock Exchange Index, since the negative sentiment over the pandemic COVID-19 still linger, particularly with the community quarantine in Metro Manila. Although goods and services will continue to flow, and no disruption of supply is expected, the demand for goods and services might drop since the public is avoiding crowded places, Lim Lingan added. China is supposed to release economic data which will indicate how much growth has been affected by the pandemic, Lim Lingan said. For the stock picks, broker Regina Capital has recommended to cut losses on the stock of mall operator SM Prime Holdings Incorporated or SMPH, after the stock price spent 5 straight days in the oversold region, while momentum is still only picking up. Broker Regina Capital said, keep in mind that despite the increasingly strong selling pressure from all indicators, the stock may very well be in line for a technical correction. The stock is now at its 3-year low. With volatility also at significantly high levels, expect a challenge to the nearest support at 30 pesos and 60 centavos during the next trading session, after SMPH barreled through the initial support level at 32 pesos and 50 centavos. Regina Capital added that there is nevertheless a likelihood of a bounce back should this level hold. The shares of SMPH closed Friday at 30 pesos apiece. Meanwhile, Regina Capital recommended a sell on the stock of Ayala Land Incorporated or ALI, after it also pushed the stock into the oversold region. Considering that ALI has only just reached these levels, there may be more downturn in store for the stock, the broker said. While there is a support waiting at 33 pesos and 05 centavos, chances of ALI fully absorbing the downturn are slim, Regina Capital said. The next one at 32 pesos and 10 centavos is a more reliable support at this point, the broker added. Ayala Land shares closed at 33 pesos apiece.
Thank you for listening to the Business Mirror podcast. For a broader look on business, follow us on Facebook and Twitter at Business Mirror. Until next time.